And we are live. Good evening, everyone. Tonight we will be discussing why gold and silver is the perfect hedge against inflation. We'll talk about some comments that was left on my previous video. So as usual, type 1 in the chat if you can see and hear me nice and clearly. And for those of you who are new to the channel, please subscribe and hit the notification bell so that you get all of the notifications when I'm going live and I upload my videos. Please like this video and share this video. Also, my other social media platforms will be in the description below. If you want to support the content financially, my PayPal will be in the description. Thank you to those of you who hit the PayPal up in the last live stream. I don't have a list. I can't log into my PayPal right now because my phone died. But in the next live stream, I promise to shout everyone out. How's it going, Zulu Immortal? So another thing I want to talk about and speak on. There's a difference between reading comprehension and listening comprehension. And as usual, we're going to start at around the 3 to 4 minute mark. I like to let more people come into the live stream. But there's a difference between listening and reading comprehension. And a lot of people lack those two skill sets. See, it's one thing to read something. It's another thing to actually understand what you're reading. See, that's reading comprehension. Then there's listening comprehension. It's one thing to hear something, but it's another thing to actually understand what you're hearing. And a lot of times people just hear what they want to hear. And I definitely want to talk about that. Some comments that was left on my last video I did about Ray Dalio. So as usual, we're going to talk about investing in gold. We're going to talk about investing in silver. We're going to talk about why cash is trash and you need to immediately, soon as you get paid some cash, you need to be diversifying and putting it into things that are going to appreciate in value faster than inflation. Frost said, "What's good?" Guys, I'm not worried about Umar Johnson. Umar Johnson, he's definitely falling apart, as we can see. He's running out of money. And one thing my coach and my mentor used to always tell me is that time reveals all. You can only fake it for but so long before people eventually catch on to what you're doing. And eventually people get tired of hearing about what you're going to do, and they want to actually see you start doing those things. And that's the beauty of, life and time. So Umar Johnson's just getting exactly what he needs to get. So, and it's just, that's another reason why I stopped covering that, is that you see how many views an Umar Johnson video would get. I easily can get 20,000 views, 30,000 views for an Umar Johnson video. But it's at this point, it's like beating a dead horse. You're just talking about the same things over and over again. So with that being said, let's get to the presentation tonight. Whenever you start talking about building wealth, making money, entrepreneurship, doing things for yourself to better yourself financially, you begin to attract two types of people. The first individual that you attract, that's the person who they're agnostic. And the funny thing is, in my previous video and on this channel, you never hear me talk about getting rich. Instead, what I talk about is building wealth, financial freedom. That's a big difference, right? That's not the same thing as, did the stream go out? It says it's buffering right now. Hold on real quick. Let me just check something. Okay, I'm still live. Yeah, I never talk about getting rich. Instead, what I talk about is I talk about building wealth over time. Not telling you that you're going to buy one of these coins and you're just going to get rich and all of your problems is going away. This is a hedge against inflation. This isn't about getting rich, okay? And I made that very clear in my video. And then the second individual that it tends to attract is the know-it-all, the person who can tell you why you don't know what you're talking about, or why this stock is better than gold and silver, or why you should be investing in real estate, or why their formula is so much better than everyone else's. And it's laughable. So what I'm going to do is first I'm going to play the last video that I put up, because see, financial freedom is a number. If I can make $3,000 per month passively on my own terms without me having to get up and go to work, that's beautiful. That's $36,000 for the year. Now for you, you may need $5,000 per month to be financially free. You may need $10,000 per month to be financially free. You can be financially free and not be worth millions of dollars. Understand that there's a difference between financial freedom and being a millionaire. And I'm going to give you a blueprint, a template that if you follow it, it will work for you. Now, understand, I'm not saying that this is fair. I'm not saying that this is good or bad. But these are the rules to the game. That's like playing basketball and saying, I don't want to dribble the basketball anymore. I want to play basketball with a football. Well, that's not the rules of the game. And here, in this economy and society that we live in, there's rules to building wealth. Now, you could follow those rules that are very easy to follow, or you could go and you could try to make your own rules. The choice is always yours. But we have a method that's proven, and we have a method that isn't proven. So with that being said, let's get to what I want to show you for the day. So let's flip this over. So this is a video that I put up the other day, and I want to play it so you can hear what I had to say. At $1,650 as of today per coin. And this is a 1 ounce American Eagle silver coin, and it's sitting somewhere around $20 to $22 per ounce. What a lot of people get wrong about the asset class of precious metals is that it's not a speculative asset class. The sole purpose of buying gold and silver is to preserve your purchasing power. It is a hedge, an insurance policy against your government and inflation. You have your federal. So I clearly stated in that video that gold and silver is a hedge. It is an insurance policy against inflation. It is an insurance policy against your government printing money and debasing your currency. I did not say that it's a speculative asset that's superior to stocks. I did not say that buying gold and silver is better than buying real estate. I did not say that it's better than crypto. What I said in the video, and I'm about to play it again, I said that I take 50% of my savings and I park it in precious metals to preserve my purchasing power. And I leave the other 50% of my savings in my savings account. And I build wealth through dividend paying stocks in the gold and mining sector. And I build wealth in real estate, cash flowing real estate. And I build wealth in crypto projects. So I'm going to play my own words so you can hear it, because I'm going to show you where we're going in a second. Chairman, to preserve my purchasing power is I take 50% of my savings and I park it in gold and silver. Why? Because rather than having my money sit in a bank account and lose on average 2 to 3% on a yearly basis, I want to park my money in gold and silver and actually get appreciation and maintain my purchasing power. Now, when Ray Dalio is talking about Bitcoin, I also agree with him. As of today, Bitcoin is a speculative asset. It's not a store of value, and it's not a good medium of exchange today. But what you projects, because see what you, right? Simple and that wealth transfer and invest. So what Bitcoin is going to become applications that was built on top of that protocol in precious metal mining stocks that pay out dividends. Now, why are we even in currency? I built, it's the internet. That's the value proposition of a Bitcoin. So again, I preserve wealth in gold and silver. I build wealth in cryptocurrency. I build wealth in real estate. I build wealth in precious metal mining stocks that pay out dividends. Now, so you clearly heard me say that. Now, why I'm bringing this up is there was an individual who left me a comment. There were 2 comments on this video. One of them I deleted because the guy was being very disrespectful. But this guy right here, Arthur Swanson, he came on and he wanted to debate what I was saying in this video. And as I said before, you start to attract people when you're talking about, and this is not an attack on Arthur Swanson. I want to make that clear. But I wanted to read to you what he said. He commented, he says, I agree that fiat money can lose a fair amount of perceived value in short order. But bear in mind, if any of these apocalyptic scenarios that Schiff, Paul, etc. come to fruition, gold and any other metal will be as useless as Pokemon cards. This is what he's saying. Now, understand, the apocalyptic scenario has already happened. And I'm going to give you the data and the facts to break down and show you where we're going with this. Number one, if we have a pandemic like the coronavirus, I'm not going to be outside trying to trade gold coins with people for food. If a zombie apocalypse happens, I want land, I want shelter, I want food, and I want guns. We're not talking about apocalyptic scenarios here. In that video, I didn't speak about apocalyptic scenarios. I was speaking about preserving and building wealth. So already you can see that he's already coming from a combative standpoint, and he's deflecting and trying to change the narrative in the context of the conversation. Then he goes to say, the only currency that would mean anything in a total economic collapse is bullets, food, and energy supplies. Notice in that video, I didn't talk about a total economic collapse. He says gold, silver, any other metal relies on perception for value as much as the dollar. Just because it's physical doesn't mean it's durable as a store of value. Iron, aluminum, copper, rand, I guess he meant to say N, but he said rand, and more useful metals anyway. In the event of an economic collapse, try to build a car, skyscraper, or electrical power grid with gold and silver instead of copper and iron. Try to build a cell phone or electric car replacing the lithium batteries with gold and silver. Try to build a car battery with gold and silver instead of lead. Good luck. Now, right now, see, I don't deal in speculation. I manage money. I do this for a living. So when I speak to you, I'm speaking to you about things I'm putting my money in. This right here is an inflation calculator. This calculator right here is taking the actual CPI, the government data, and it's going to extrapolate that and spread that out over any time period. Now, I picked 1971 for a particular reason. Why? Because 1971 is when Nixon took us off the gold standard. Right? Follow me here. Now, for those of you, let's just pull up the chart so we can see this right here. You can see 1971, Nixon closes gold window, end of Bretton Woods, beginning of the modern day fiat currency. Okay? In 1935, if you compared the dollar from then, you could buy $222.08 worth of goods and services back in 1971. That's how much your dollar could buy compared to today. Now, how much could that same $35 buy today? So in 1935, the dollar had a purchasing power of $222 compared to today. Now, if you took that same $35 and you left it in your bank account today, that same $35 has the purchasing power of $5.28. Think about that. I want you to think about that for a second. I picked $35 because you could buy an ounce of gold in 1971 for $35. I really want you to think about this for a second. So he's telling me an apocalyptic scenario. Today, gold is trading at $1,576. So he wants to play around with adjusted for inflation and all that. We don't have to play that game. If I took $35 and I left it in my bank account in 1971 and didn't touch it until 2020, and I took another $35 and I put it into an ounce of gold, which one performed better? Tell me, chat, is this complicated? Are we talking about trying to, build a rocket and fly it to Mars? Are we trying to decipher some ancient decrypted language? No. This is very simple. If you take $35 and you sit it in your bank account, and you take $35 and you put it in an ounce of gold in 1971, today, that ounce of gold, you can sell it for $1,575. If you held on to that money, it'll still be $35, but could it buy the same thing that it could buy in 1971? No. That $35 today would be worth, you can see it right here on the chart, $5.28. So again, what did I say in the video? I preserve, not speculate. I preserve wealth and gold and silver. And I'm going to break it down to you why gold and silver is viewed as money. And the opportunity that you have here. Now understand, if you're poor, I'm not here selling you on the idea that you're going to buy a gold coin and get rich. We're talking about building wealth over time. We're talking about you enter the workplace at the age of 24. And in a 20 to 25 year period, instead of waiting to 65 to retire, you want to retire at the age of 45 or 47 is what we're talking about. I want income producing real estate. Now, what do you do with the income that you make from real estate? What do you do with the appreciation that you make from real estate? Do you just put it in your bank account where I just showed you you're losing money? This is $1971 compared to 2020. This is your Federal Reserve chairman right here. The Fed still worried U.S. inflation will remain too low in light of a weak global economy. Now, what I did is I pulled up an Excel spreadsheet. And I want to show you this. I couldn't get the spreadsheet to put it into percentage terms. I want you to look at this, though. This is 1971. This is $35. This is what it was. This is your base number you're starting with. The inflation rate in 1971 was 4%, and 72 is 3%, and 73 is 6%, and 74 is 11%, and 75 is 9%, and 76 is 6%, and 77. Look at this. Every year, inflation. This is cumulative. It's building. That means every year your dollar is losing value. Look at this. Every year you're losing money. If you park money in the bank account, you are losing money. 3%. See, the problem with inflation is that you don't feel it immediately. It's a hidden tax. It's stealthy. It builds over time. No one said that gold and silver is going to outperform the stock market. No one said that gold and silver is going to outperform real estate. What we're saying is you preserve wealth. When you get out of your asset, because eventually you have to sell a stock, right? You can't hold the stock forever. So eventually you're going to want to get out of that stock. When you get out of the stock, that's what Ray Dalio was saying. What do you get into? When you sell Tesla, when you sell Apple, Facebook, Netflix, Google, Amazon, Alphabet, what do you get into? Cash is trash. So either I'm going to get into real estate, income producing real estate, or I'm going to park some money into precious metals. Now, let's start talking. Let's look at what a dollar could buy over time. Because see, this type of stuff is important, right? $1 back in the 1900s could buy patent leather shoes. Back in the 10s, $1 could buy a woman's house dress. In the 20s, it could buy a 5-pound bag of sugar. $1 in the 30s could buy 16 cans of Campbell's soup. In the 40s, it could buy 20 bottles of Coca-Cola. In the 50s, it could buy one Mr. Potato Head. This blew my mind. In the 60s, $1 could buy 2 movie tickets. Can you go to the movies today for $1? How much money does it cost to go to the movies today? What? About $26? $32, depending on where you're going, depending on if it's a 3D movie. But yet back in the 60s, for $1, you could get 2 movie tickets. The money is still the same. It just buys less because of inflation. Now, I want to get back to this guy's comment, right? So I respond to him and I say, you are 1,000% incorrect. The price of gold in 1971 was $35 an ounce. Today it's sitting at $1,573. That isn't fear mongering. It's just a fact. The government devalued the dollar. Since 1910, the US dollar has lost 90% of its purchasing power. Silver is the fastest conductor of electricity, right? So then this is what he writes. See, this is listening and reading comprehension. He goes, you are missing the point. Gold is sitting at $1,573 today, which is $262 inflation adjusted in 1971 dollars. The Dow Jones Industrial Average is up 1,000% in inflation adjusted terms since 1971, beating a gold investment over the same time period easily. A bet on gold or any other natural resource over stocks is a bet on humans never coming up with anything new or innovative over a metal that's been here since forever. History has proven that bet wrong over and over again. The latest proof being Bitcoin. Now notice this. This is listening comprehension. This is reading comprehension. He didn't mention anything about stocks in his first post. So now he's trying to change the context of the argument. Now he's trying to deflect and talk about stocks. We weren't talking about stocks here. He was talking about an apocalyptic scenario. When in the video, I clearly said in the video, I preserve wealth in gold and silver, meaning I save money to maintain purchasing power. I speculate in stocks. I speculate in real estate, and I speculate in crypto. So when he's saying this is a person that's just commenting for the sake of commenting. This is the person that's just coming here to be combative. Now, in 1990, $1 could buy a gallon of milk. How much is a gallon of milk today? $3.50, $4, depending on the type of brand you buy of decent milk. If you get a decent gallon of milk. So we know that the value of the dollar has lost money. Now, the reason why gold and silver is setting up to be one of the best investments ever is that most pension funds, as far as allocation is concerned, they have less than 0.5% allocated towards precious metals. Most pension funds are heavily invested in what? Stocks and bonds, which is why we have a stock market bubble. So as an investor, you invest in things that are undervalued and you sell things that are overvalued. That's what Ray Dalio was saying in this video that I posted. He said that the stock market's at a high right now, that there's more risk to the downside than the upside. Now understand that pension funds, if you take the top 300 pension funds, they have a little bit close to almost $19 trillion under management. So what if they bump their allocation up from 0.5% to 3%? What does that do to the price of gold? See, it's called balancing of a portfolio. So when Arthur Swanson is saying that, you can tell that he hasn't done the research. See, it says at the end of last year, these retirement funds managed a combined $18.3 trillion, down from about $18.11 trillion at the end of 2017. This is the top 300 pension funds. Don't worry, Zulu Immortal. We're about to get to the central banks buying up gold as well. So when he's talking about this apocalyptic scenario, when he's talking about the Dow Jones Industrial Average, what he's not accounting for is right now, most funds don't have an allocation towards gold and silver mining stocks. They don't. So you have a chance right now to be an investor and participate in a wealth transfer or preserving your wealth, because guess what? Eventually, the herd is going to come. Now, pull this up right here. Why Russian and Chinese central banks will keep buying gold. If gold was useless, because Warren Buffett even said it's just a rock, it just sits there. Gold is scarce. It takes resources to go and find gold. And we're going to get to the stock to flow model of gold in a second. But if gold was useless, why are central banks buying it? Why would they be buying it? So let's read this real quick. It says, let me zoom in so some of you guys can see it. It says, emerging markets have beefed up gold holdings, undeterred by prices near their highest levels in more than 6 years, as countries such as Russia and China diversify their foreign exchange reserves, a trend that is likely to continue. Central bank buying is, of course, important to the supply and demand dynamic for the metal, but is much more important in terms of sentiment toward the metal, says Brian, editor of Gold Newsletter. When central banks are buying as heavily as they are, it provides cover and a rationale for other central banks to do the same. The moves are due to concerns about the outlook for currencies, including the dollar and the euro, says Mark O'Byrne, research director at Goldcore in Dublin. While the gold tonnage demand from central banks in recent months has been significant and near records, gold remains a tiny fraction of most central banks' foreign exchange reserves, he says, adding that the trend is sustainable and indeed may accelerate. So again, we go back to this chart here and we see this. The apocalyptic scenario already happened. In 1971, that $35 had the equivalent purchasing power of $222 in today's dollars. Today, if you left that same $35 sitting in your bank account since 1971, it has the purchasing power of $5.28. If you pull up this right here, since 1913, since the Federal Reserve is created, the dollar has lost 90% of its purchasing power. So when he's leaving these comments, he doesn't know what he's talking about, or he's just trying to troll, because no one ever said that gold is better than the stock market. What we're saying is that once you make money in Tesla, once you make money in Facebook, Apple, Amazon, Netflix, Google, etc., you then want to take that money and you want to park it in some cash flowing real estate, dividend paying stocks, or to preserve your purchasing power, you want to put some of it in gold and silver. It says central banks had a record first half of the year, collectively buying 374 metric tons of gold through June. Again, another article. Central banks are purchasing gold at record highs. Why? As reported by Dion at Axios, an unprecedented shift towards gold has been led by the financial authorities of the world in what appears to be a move away from the US dollar. Why? Other countries want to get away from the dollar because they're looking at what's happening with quantitative easing 1, QE2, QE3. Now we're having QE forever with the whole repo market madness. Banks are just printing money out of thin air. It's driving income inequality even further. We know that the Fed, because of the reserve currency, they can't go to negative interest rates, even though Trump wants that, so they have to print more money. Well, we see what printing money does. It devalues the dollar. The World Gold Council reported that central banks brought a historic high of 374.1 tons of gold this year. And this is in August 22nd, 2019. Now, let's talk about the stock to flow model. Because again, Arthur Swanson, he's telling you that other metals such as, what he said, copper. Let's pull it up. Where did he put it at? Right here. He said, yeah, aluminum, iron, and copper. So let's look at a stock to flow, right? So, scarcity and stock to flow. Understand that all of the gold in the world that's currently above ground, that's been pulled out of the ground, can fit in an Olympic-sized pool. That's scarcity. That's scarcity. Understand, if you get up every day and you trade your most valuable asset, which is your time, you want to get paid in something that's valuable. You don't want to get paid in something that they can just print, or they can just put a whole bunch of digital ones and zeros at the stroke of a pen or at the click of a button. You want to get paid in something that's going to maintain its value. If you took $35 and you held it since 1971, you lost money. If you took $35 and you put it into an ounce of gold, you not only made money, but you've maintained your purchasing power. You're holding something that's real. That's wealth. We're talking about financial freedom. We're not talking about getting rich in a penny stock. We're not talking about that you're going to, buy some penny stock and it goes to $1 million. We're talking about, can you make $3,000 to $4,000 every month passively? Can every 5 or 6 years you get a rental property? Can you dollar cost average and put some money into a cryptocurrency project? Is what we're talking about. We're not talking about a lottery ticket mentality. So, dictionaries usually define scarcity as a situation in which something is not easy to find or easy to get and lack of something. Safadine Amos talks about scarcity in terms of stock to flow ratio. He explains why gold and Bitcoin are different from consumable commodities like copper, zinc, nickel, brass, because they have a high stock to flow ratio. I want to repeat that to you again. Gold is different than other commodities because it's hard to find gold. It's easy to find copper. It's easy to find zinc. It's easy to find nickel. It's not easy to find gold and silver. And we're going to get to that in a second. For any consumable commodity, doubling the output would dwarf any existing stockpiles, bringing the price crashing down and hurting the holders. For gold, a price spike that causes a doubling of annual production would be insignificant, increasing stockpiles by 3% rather than 1.5%. If it is this consistently low rate of supply of gold that is the fundamental reason it has maintained its monetary role throughout human history. It's a reason why gold and silver has always been money, because it's hard to produce it. It takes a lot of manpower and machines and equipment that cost hundreds of thousands of dollars. It takes a lot of oil and other resources to go into the ground and find it. It's not easy. So if you're getting paid as a human, you want to get paid in something that's going to maintain its value. Now, very simple ratio. This is not, differential equations. We're not talking about linear algebra. It's just very simple, very simple formula. Stock to flow simply means the stock divided by the flow. The stock is the amount that's currently above ground. The flow is how much is being pulled out of ground, the production. And you just divide it. It says stock is the size of the existing stockpiles or reserves. Flow is the yearly production. Instead of SF, people also use supply growth rate. That's the flow divided by the stock, however you want to go about it. So look at gold. There's currently 185,000 tons above ground, and the flow is 3,000 tons every year. So if you divide that, that means in order to get the current amount of gold that's above ground, it would take 62 years of production. It would take 62 years of digging into the ground to get the current amount of gold that's above ground. That's hard to find. That's hard. That's why it's called hard money. You can't just print more of it. You can't just print more gold. You can't just go and find more of it. It's hard. This is why it's called God's money. It would take 62 years of current production to equal the total amount of stock that's above ground. Silver, it would take 22 years to equal the current stock that's above ground. Now look at palladium and platinum. It only takes a year. It would only take a year to find it. It's the same thing with copper and aluminum and zinc and brass. They have a stock to flow ratio of 1. It's easy to find copper. It's easy to find aluminum. That's why it can never be used as money, because it's easy to find. So now when you understand that, and now you start looking at the industrial use cases, well, silver is the fastest conductor of electricity, and it's used in most of our electronics. So you're using a commodity that's hard to find, and you're using it in consumable electronics. So even though you may be using a little bit of it, once you use it, you lose it. Because in most cases, you can't melt down the technology to get the silver back. So when he's talking about copper, you can't compare copper to silver because it's easy to find copper. It's not easy to find silver. It takes you 22 years to find enough silver to be equivalent to what's above ground now. That's what makes gold and silver money. There's a difference between money and fiat currencies. Now, I want to show you real quick. This is money. This is how your money is made. I think Jesse James, I think it's one Olympic size pool, or it could be 22. I'm not sure. We can look that up as we do now. I was under the impression it was one, but we can pull that up right now. But this is how your fiat dollar is made. So gold Olympic pool. This is how fiat currencies is made. Now, look what you have to do to find gold. Look at the equipment that you need. You have to go into the ground. It's not easy to find gold. You can't just print more of this. And this is a small gold mining operation. Small gold mining operation. So again, when I'm making these videos, I'm not telling you that you're going to buy a gold coin and get rich. 22 years to find silver equivalent above ground. Did I say that right? Yes, 100% the left hood man. So, I'm not telling you that you're just going to buy these coins and get rich. No, if you have wealth. Now, if you're poor, you need a different strategy. And this isn't financial advice. I'm just simply sharing with you how I've been building wealth over the past 2 years. So again, let's listen to my words so we can see Arthur Swanson is wrong. Arthur Swanson is 1,000% wrong. First of all, he's deflecting. He's changing the narrative because in his first paragraph, he doesn't even mention stocks. And then he comes here and says the Dow Jones outperformed gold. And I said, yeah. Of course it is. 2 Olympic-sized swimming pools. There we go. So, when we're talking, this isn't complicated. Of course, stocks are going to outperform gold and silver. They're income-producing assets. I mean, they're wealth-producing assets. They're designed to produce wealth. And dividend-paying stocks that pay out dividends, they're cash-flowing assets. Real estate's a cash-flowing asset. But you're getting paid in a dollar that's losing value. So I want to put 50% of my money in savings and 50% into precious metals. So I want to play this again so you can hear me say this clearly.
I proposition to invest in currency. I build wealth in real estate. I build wealth of a Bitcoin. So again, I preserve wealth in gold and silver. I build wealth in cryptocurrency. I build wealth in real estate. I build wealth in precious metal mining stocks that pay out dividends. Now, why are we even doing this in the first place? Because if history
So I clearly made it clear in the video. And again, this is not an attack on Arthur Swanson. This is just making this video to educate people, because sometimes people, they may not know what real money is. A lot of people don't know about inflation. A lot of people don't know about the value of their money, the buying power of $35 over the past 49 years. They don't know that $35 in 1971 had the purchasing power of $222. They don't know that. They don't know that if they took that same $35 and put it into gold, you would have today, if you sold it, $1,574. Look at the cost of education. Look at the cost of healthcare. Look at the cost of housing. It continuously keeps going up. So when we're talking about building wealth, we also have to talk about preserving wealth. Now, my mentor taught me this, because another guy left a comment and I just deleted him and blocked him. But he was talking about getting rich is like hitting the lottery. Getting rich is like, it's a fantasy. When have I ever spoken about getting rich? I don't talk about getting rich. I talk about preserving wealth and building wealth over time. Understand that if you buy a rental property every 5 years, a cash flowing multi-unit rental property every 5 years, within 20 years, you'll have enough cash flow to retire. So let's talk about that. Because see, there's a game, the board game called Monopoly. We've all played this game as a kid. What's the nature of the game? How does the game work? The goal of the game is to get 4 greenhouses and then get a hotel, right? First, you need to get each color property. If you treat this game, the principles from this game, if you take it and apply it to your life, this is how you build wealth. Over time, every 5 years, you buy a rental property. Now, this is a template. This isn't financial advice. You may use a FHA loan to do it. You may go conventional with 20% down. Your strategy may be REOs, foreclosures. You may be a flipper. I'm not here to tell you what works for you. Remember, it's like playing basketball. Everyone has different strengths and weaknesses. Steph Curry's a shooter. He runs off screens. LeBron James is physically imposing. He runs through you. Right? Russell Westbrook's all about athleticism. Everyone has a different way of how they're going to approach building wealth. You must find what works for you. I'm just giving you some ideas of how to build. So at the age of 24, 25, you embark on your wealth building journey. You buy that first greenhouse. You buy it for $40,000. Fix it up. We're using small numbers for mathematical purposes. You fix it up, you get it appraised. It's worth $50,000 now. You get a tenant in that property or 2 tenants in that property. They're paying the mortgage for you. They're building the equity for you. You're cash flowing $100, $200. You build up some equity in the property, and then you go and you refinance the property, and you take out 70% of the value, 75% of the value. You take out 75% of the value at $50,000. That's $35,000 cash you have. Now you take that $35,000 cash, and what do? After 3 to 5 years, you're going to do what? You go buy your second greenhouse. Rinse and repeat. Name of the game, buy low, sell high. Or buy low, cash flow. You don't care about the refinance. You know why? Because the tenant is paying down the mortgage for you. The tenant is paying the expenses. Now you got your second greenhouse. What do? Buy it for $40,000. It appreciates to $50,000. You refinance. You take out 75%. Rinse and repeat. You get your third greenhouse. And before you know it, you have 3 or 4 greenhouses, and now you go for the hotel. Because see, if you can make $3,000 per month passively, that may be your financial freedom number. That's only $36,000 a year. But if you can make that on your own terms without having to go to work every day, is it worth it? Building wealth over time, not getting rich overnight, not buying some stock market course that's going to teach you how to be the best day trader in the world, not being the ultimate house flipper. You mean to tell me you can't buy one rental property every 3 to 5 years? One rental property every 3 to 5 years? Move a tenant in there, let them pay down the mortgage for you, let them build some equity for you while you're working your job, because you work full-time on your job and you work part-time on your fortune. Guys, I've been doing this for 12 years. I didn't become successful overnight. But when you're making this cash flow, where are you going to park the cash flow? What did Ray Dalio say in that interview? He said that when you hop out of the stock market, you have to jump into something. What's going to be that something? He said that something was gold. That was the purpose of the video. I never said that you're going to get rich. I never said that you're going to be a millionaire. There's a book called The Millionaire Next Door. Great book. Buy one rental property every 5 years. One. Just buy one. Even if you have to do it with a group of people. Pool your money together. One. Now, if you're poor, this isn't for you. If you're poor, you need to get better skills. You need to get a better job. Try to get more education. Try to become more valuable. I don't know. Right? But if you have a job and you're of working age and you have some type of income and you're a functioning person in society, what did I say in the video? I build wealth through gold and silver mining stocks that pay dividends. I build wealth through cryptocurrencies. I build wealth through cash flowing real estate. I preserve wealth in precious metals. We're not talking about apocalyptic scenarios. I'm not talking to you about the dollar collapsing, the Illuminati, the Bilderberg. I'm not talking to you about some swine flu epidemic and you're going to be out here trading your little gold coins. No, you don't even have to own the actual physical coin. Let's say that you don't want to deal with holding your gold and silver. Some people don't want to hold gold and silver. Then you can buy the GLD, the ETF. You don't have to own the little gold coins. I just like to hold my wealth in my hands. You don't have to do that. You see, that's why it's called wealth building for you, financial freedom for you. You may want to go about it in a different route, in a different way than I do. I like to own my coins. You may just want to have the ETF. That's the beautiful thing about building wealth over time. You can figure out which strategy works for you. But treat life like the game of Monopoly. Buy one rental property, preferably multi-unit real estate, 2 to 4 units. I don't care how you do the financing. I don't care if you use a 0% interest credit card, a FHA loan, a VA loan. However you go about doing the financing, that's for you to do. My job is to teach you how to fish. Your job is to go out and catch the fish. Jesse James said, "Hey, Common, I have a friend that brought 20 mobile homes and he is renting at about $500 per. Was that a good investment if it cash flows?" Any real estate that cash flows to me is a good investment. I don't care if it's mobile homes. I don't care if it's, in the projects, if it's in a low income neighborhood. If it cash flows, if he's renting them at it all depends on the neighborhood, right? Like, $500 per month in New York City, you'll probably be losing money. But somewhere in, Alabama, Tennessee, Nashville, in parts of Georgia and Atlanta, $500 per month would be good. It all depends on where he purchased that. And that's another thing about real estate. It's about location and it's about the market. And it's about cash flow. And it's what you do with that cash flow. Yes, it's an ETF. The GLD is an exchange traded fund that mimics gold. So when you get a chance, just type in the GLD ETF in Google and educate yourself about this stuff. It's a paper version of gold, because some people don't want to own the physical coin and they don't want to own the physical blocks, the bricks of gold, the bullion. Some people don't want to own bullion. So instead of owning a bullion, what they do is they take it and they own the paper version of it. It's a claim on gold. So some people just want to own the ETF that mimics the price of gold. But yes, Zulu Mortal, that's how you do it. You build wealth by working full-time on your job and part-time on your fortune. Because as I said before, if you took $35 and you parked it in your bank account in 1971 and you didn't touch it for the past 49 years, you lost money. If you took that same $35 and you put an ounce of gold in 1971, you have the purchasing power of $1,574. That's what this is about. It's about building wealth over time. What did Nipsey Hussle say? It's a marathon, right? See, a lot of you listen to these rap lyrics, you listen to these rappers, but you don't really live by the principles. If you lived by the principle that the marathon continues, then you understand you're building for your legacy. You're not going to be 30 forever. GDX GDX and GDXJ. They have the triple bear and triple bull ETFs as well. Mine doesn't also get a dividend. There's a lot of. I'm going to get into that, Mark J, later on, into the ETFs and stuff like that. This is the progression of building. Because as I said before, a lot of us, we're too concerned with the Umar Johnsons of the world. We're too concerned with the Hassan Campbells. We're too concerned with the polites, the entertainment, and we don't take enough time to really focus on things that matter. Gold is hard money. Look at the stock to flow ratio. It would take 62 years of current production to equal 185,000 tons. I didn't get to the gold to silver ratio yet. I'm just talking about the stock to flow ratio right now. Grime. Those are all ETFs. The left hood man. Look at silver. It would take 22 years of current production to equal all of the above ground silver. So that's why gold and silver is money. That's why it's a hedge against inflation. Because commodities like palladium, platinum, copper, zinc, nickel, you can get that whole stockpile in less than 2 years. That's why it's not money. That's why it can't be used as money. That's why gold and silver has always been money. Because you're exchanging your time when you work. So you want to get paid in something that's going to hold value over time. Now, yes, in an apocalyptic scenario, you're not going to go outside with your little gold coin and crypto and say, hey, you're going to want land, you're going to want food, you're going to want a gun. But that's not what we were talking about. Right? Arthur Swanson, he just wanted to come into debate. And this is what happens when you start talking about wealth building. And guys, there's 71 of you watching this. Please hit that like button. It helps the content rank in the search engine. When you start talking about wealth building, you get the Arthur Swansons of the world who they just want to be smart and make a comment. I never said that gold and silver is going to outperform the stock market. I never said that you should own gold and silver. If all you have is $1,000, you shouldn't be buying no gold and silver, right? Because you don't have any wealth to preserve. You preserve wealth when you start making money, right? The very first thing I would do, here's a tip. My mentor taught me. Before you start building wealth, fire your landlord. I didn't really understand what he meant at the time. See, when you own your home, you control how much it costs to live there. You control your living expenses. And then if you get a multi-unit joint, let me give you some game. If you're young You can get a multifamily unit where you live upstairs and your tenant lives downstairs. So now your tenant who lives downstairs, he or she is going to pay you rent every month. And that's either going to be enough to cover the mortgage, or you may have to cover half the mortgage. So that cuts your rental expense in half. So think about it. If it costs you $1,500 per month to rent your home, to rent your apartment, but if you brought a home with a tenant in it, and now your rental expense went from $1,500 to $750 a month, then that extra $750 that you're bringing in every month, now you can take that extra $750 and now you can start investing in that, investing with that. The very first thing you should be trying to do is acquire land. You know why? Because you can't print more land. There's a fixed amount of livable land. It's the same as gold. There's a fixed amount of money. And yeah, Arthur Swanson, as I said earlier, I'm not attacking you. I'm building on this, because I think that it's important for people to know this. The get a good job mantra has been so detrimental for black people. I know boomers who don't have appreciated assets, and this stuff is like foreign language to them, and they tell you go to school. Exactly, Alexander Wilson. I didn't learn this stuff from my parents. My parents never did this type of stuff. I learned this from, as I said, my mentor. I happened to be in a network marketing company, and when I was in the network marketing company, I had met this Jewish guy in the company. And he started speaking to me about, things outside of network marketing, about wealth building strategies. Because at the time, this was back in 2008, 9, and 10, when there was a lot of fear in the marketplace and no one wanted to touch real estate. And he told me, investing is like a pendulum. Things go from overvalued to undervalued. See, the problem with most people is they don't want to tackle this stuff because, as I said, this is a 20-year journey. I'm not telling you you're going to get rich overnight. See, this is not sexy. If I was like Jay Morrison and I was driving a nice Lamborghini or, a nice Ferrari or BMW, and I was hanging out with rappers, I would have 500 people watching me, 1,000 people watching me. But see, what I'm talking to you about is doing something over time the hard way, or passing this game to your children. So now you can give your kids something. Like I did the video the other day about student loans. Telling your kids that they don't have to go to college, that they can get a skill, they can get a trade and earn the same money. Because if you make $55,000 a year and I make $40,000 a year, but you're paying $400 a month in student loans, you may make more money than me on the net level, on the gross level, but at the net, after all of your expenses and lifestyle, I make more money than you. So this is why it's important to educate yourself about these things. And take the time out. And as I said before, this is not about trying to get rich quick. This is about building wealth over time. So when that guy comes and says, oh, getting rich is like hitting the lottery, who said anything about getting rich? Who said anything about getting rich, right? We're talking about building wealth, right? You build wealth in stocks, you build wealth in real estate, you build wealth in crypto, you preserve wealth in gold and silver. Very, very simple, not hard. You can go all the way back to the Roman Empire when gold and silver was money. Now let's talk about a little bit about Bitcoin, right? I made this video April 10th, 2019. It says, Minister Jap, stop talking about Bitcoin. You have no clue. Right? Now, let's look at a chart of Bitcoin. Let's pull this up. BTC, USD. All right. So let's pull up the Bitcoin chart, BTC. Right. So let's look at Bitcoin USDT. That's weird. None of these have given us the right thing. So I want to show you something. Let's look at this. None of these are working properly. So what we're going to do, let's try this one more time. BTC, CFD, cryptocurrency. There we go. All right. And let's look at the weekly chart. Let's get rid of some of these. Let's trash this. Let's get rid of this. This is just me doing some charting. So let's go back to this video again. You can see this video is from April 10th, 2019. The lottery has been detrimental to the black community. Also, it's a tax on poor people. I swear, I've seen people spend thousands on tickets in one trip. Absolutely. I'm glad you said that, Alexander Wilson, because I'm about to jump into that in a second. I'm about to jump into that in a quick second. That's exactly where I'm going. So, April 10th, 2019 is when I made that video, right? So, we have March right in here, right? So, this is, let's say that I made that video. Bitcoin was trading at $5,000 per coin. Well, I've been buying since there, right? Theoretically, right? We're going to use a hypothetical. I've been buying here, and Bitcoin pops all the way up to 14,000. In fiat dollar terms, I made more money than I could ever make in gold. This way outperformed gold over this time period. So when I say I build wealth in crypto, I doubled my money. Today, Bitcoin is sitting at $10,119. I made this video April 10th, 2019. So you can see in a matter of what? April, May, June, July, August, September, October, November, December. So what? We're coming up on about what? 9 months, 10 months? I doubled my money. Even back here, in 2 months, I doubled my money. But let's say I didn't sell here, I held on. So you can see, I can build wealth much faster in the stock market. I could build wealth much faster in crypto. I can build wealth much faster in real estate than I can in holding gold and silver. So that's why I said I take 50% of my savings. 50% of my savings, and I park it in gold and silver. And then I take the other 50% and I leave it in the bank account. So this is an article. 10,000 right now. Bitcoin's sitting at $10,180. Right. Investors would be hard pressed to name a better performing asset class so far in 2019 than Bitcoin. Gold up 17% since December 31st. Stocks, the Standard & Poor's 500 index, returned 21% through September 30th. Bonds, the 10-year U.S. Treasury bond is yielding just 1.6%, close to historic lows. In Bitcoin, prices for the cryptocurrency finished the third quarter around $8,308, according to data provider Messari, up 114% on the year. Investors who bought on the last day of 2018 would have doubled their money and some. I just showed you I doubled my money. Now, I'm not selling my Bitcoin. I'm going to hold my Bitcoin because I believe that Bitcoin and cryptocurrency is the future. I believe that Bitcoin is going to easily hit 100K, 200K. But what I'm trying to show you is that if I decided to sell this, I doubled my money. So let's say I put 5,000. Again, I can't fake this. This is not me talking out of, my behind. I'm showing you things I actually invest in. I'm showing you things that I do, right? I'm not sitting up here talking about Lizzo and the Black Boot Camp and the Black Millionaire Boot Camp. No, I'm showing you real tangible things. I made this video April 10th, 2019, talking about Bitcoin, talking about my investments in Bitcoin. And on that day, Bitcoin was trading at around $5,000 an ounce. I mean, a coin. I said an ounce, talking about gold. At $5,000 per coin. It's sitting at $10,000 today. I doubled my money. Now, when I double my money, what do I do with the doubled money? I have to put it somewhere. I put half in precious metals to preserve purchasing power, and I put the other half into my savings account. That's what I do. Very, very simple. Not complicated at all. Now, Fiat currencies has pros and cons compared to gold and silver. For one, it's much easier to walk around with paper in your pocket than a bunch of gold coins. Also, gold is very constrictive. It constricts your economy because if you have a gold standard and it's pegged to your currency, you really only can trade and move as much goods and services, as much gold and silver that you have in your economy. But it's also good because it controls governments and stops them from going to unnecessary wars, right? All of these unnecessary tax cuts and tax breaks for the rich, right? Because when the government starts to intervene in the market and pick winners and losers, the people who are the closest to the money printer are always going to get the benefit of the inflation because they get to spend the money before the inflation hits the economy. I didn't sell any of my Bitcoin. And I was using it as a hypothetical. I was saying that if I was here and I brought Bitcoin at 5,000 and I sold it today at 10,000, I doubled my money. So when I get out, where am I going to put it? I'm not selling my Bitcoin. I'm dollar cost averaging. For those of you who do not know what dollar cost averaging is, if I buy Bitcoin at 10 and it goes down to, let's say, $5 and I buy another Bitcoin at $5, you take 10 and 5 and you divide it by 2. That gives you the average price. So it's called dollar cost averaging, and I'll pull it up for you. That's what I taught a lot of people. You can basically reduce your risk by dollar cost averaging. So rather than buying all of your Bitcoin at one time, you could buy $100 a week. You can buy $100 per month. You could buy $400 per month. This way now you're buying it over time rather than trying to time the market, because you're never going to be able to time the market. And this is what we're talking about, right? We're talking about accumulating wealth over time, right? So if you had a portfolio, if I had $100,000, I would put 5 or 10,000 in gold and silver. The rest of the 90,000, I would be investing that into real estate, into dividend paying stocks, into growth stocks like Tesla, like Chipotle Mexican Grill, growth investments like Bitcoin that I know are going to 3x, 10x, 5x my investment. So again, this isn't financial advice, right? This is me planting a seed in your mind to get you to start thinking, right? That's the whole purpose. I'm not fishing for you. I'm not telling you buy this stock, buy this cryptocurrency. You have to go out and do the research. My job is I just make the research a little bit easier for you, or I point you in the right direction and show you where you can go and how you can do things. But again, in this video, Arthur Swanson clearly took what I said in this video and he just heard what he wanted to hear. I made it very clear. I preserve wealth in precious metals and I accumulate wealth and build wealth through speculative assets. And that's what I've been doing over time. So I'll answer a few questions if any of you have any questions. But back to somebody posted something earlier, the lottery ticket mentality. This is why so many people get scammed with these penny stocks, and they get scammed with like these courses and these real estate courses and stuff, or the Tulsa real estate fund, because a lot of people, they have this mentality, this microwave mentality where they're going to buy this course and just get rich, and that's just not how things work. I've been doing this for 12 years, guys. 12. I just started getting success in the past 4 or 5 years. I've been on this journey for 12 years. I've had a lot of ups and I've had a lot of downs. I've learned a lot. The best place to buy coins for beginners is AppMex, I would say. I have some other brokers that I can recommend to you. I'll put together a list, but to keep things simple, I would say AppMex is the best place to buy your gold and silver. But remember, guys, gold and silver is just simply a hedge. It's an insurance policy. If you don't really have a lot of wealth like that, you don't really need to be focusing on gold and silver. You need to be focusing on income producing assets. And my best advice that I can give to you is to own real estate. The very first thing I would do is go with real estate. Go with cash flowing real estate. Get rid of your landlord and collect the cash flow and then use the cash flow to make investments. He says, what's a good cold storage wallet? The best cold storage I can give you right now is Ledger, is a Nano Ledger. But I'm gonna be honest with you. Also, there's hold on, I have another one on here. I think it's called Cold Fusion something. Give me 1 second. This is a good wallet as well. I had it on here the other day. Yeah, I don't have it on here right now. But the device that I use, I just use my Nano Ledger. But what you have to understand, the Trezor just got hacked. I think it was like last week. The Trezor wallet, that's a cold storage wallet, it got hacked as well. You still need to make sure that you're securing these devices in like some type of a safe, or use some type of like a multi-signature wallet, multi-sig. Don't just go with, oh, well, I'm safe, because anything electronic, in my personal opinion, can be hacked. I'm just going to be honest with you. I don't trust any of these devices where I can just leave it and let someone steal it. Make sure that you have your backup phrase, you're protecting it properly, and still make sure you're keeping your cold wallet, your cold storage away from people, because I believe that anything that's electronic can be hacked. Tony Turner books, I don't know who he is. I have no idea who Tony Turner is. I know who Tony Robbins is. I don't know who Tony Turner is. I've never heard of that person. Let's look him up. Tony Turner. Oh, this is a lady. I don't know who she is. I've never seen this lady before. You have to be very, very Tony Turner. How to swing trade successfully with Tony Turner. How to power up your swing trade profits. I think that swing trading is actually better than day trading. My personal opinion on the gold and silver ratio, I personally feel that it's better to own silver. I feel that silver is heavily manipulated to the downside. Silver has much more upside potential than gold does, in my personal opinion. And it also has industrial uses. And I feel like if we ever went to some type of a monetary system backed by precious metals, gold is too restrictive, and too many of the financial elites control too much of the gold supply. So I believe that we would go to more of a silver standard than a gold standard, if anything. So that's why, me personally, I would always go with silver over gold. As far as investing is concerned, as far as appreciation, is I just feel that once silver finally breaks out, it's going to rise faster than gold. See what else you have here. Swing trading is way better than day trading because you have much more of a chance of being successful. It's going to be extremely hard for you to think that you are going to trade against the high frequency traders, the HFTs, the computers, and beat them. I day traded successfully, but I also understand that there's limitations to it. Swing trading allows you to get bigger positions, allows you to hold things for much longer and get a bigger percentage of the move. This just day trading is gambling. So my first piece of land I purchased was in New Jersey. New Jersey is a hell of a lot cheaper than buying real estate in New York. New York, the taxes are just way too high. There's too many fees. But going back to the gold to silver ratio, they're basically it's, for every 25 ounces of silver, you can buy 1 ounce of gold. Grime. I personally would rather just go at buying the silver and not trying to play the ratio of the 25-1, 24-1 ratio. Like I said, I swing trade. Yeah, in my personal opinion, swing trading is better, especially for beginners. I think that swing trading is much better. especially if you're using leverage. Because, some brokers, like in the U.S., you can get 50-to-1 leverage, but in some overseas brokers, they can give you 500-to-1 leverage. So if you're using leverage properly and you're never risking more than 5% on any one trade of your account, you don't really need a good winning percentage to make a lot of money. If you're always going for 2-to-1 risk-reward ratios where you're risking $1 to make $2, and you're using good leverage and good risk management, you can make some pretty good money with swing trading. But again, these are skills that you build over time. As I said before, going back to the video, as a up and coming entrepreneur, think of investing like Monopoly. 1 greenhouse, 2 greenhouses, 3 greenhouses, 4, get a hotel. Cash flow. Take cash flow, putting in other investments, being frugal with your money, not going on a whole bunch of trips and vacations, not buying that brand new car, getting you a used car for $5,000 rather than going out and getting some brand new car and paying, $400 or $500 per month for the car plus insurance. Get a used car. This way you don't have to get full coverage insurance. You can just get liability. Like being frugal. I slept in my car for almost a year, maybe even a year and a half. I don't even remember the exact time. Not because I had to, not because I didn't have the money, but because I felt that there was better places. In New York, our rent is extremely expensive up here, right? To rent a 1-bedroom apartment in a decent neighborhood is going to cost you like $2,100, $2,000, right? So I said, rather than taking that $2,000 per month and spending it on rent, I'm going to take that $2,000 a month, stay in my car, and use that to build my business. And I did that for well over a year. And it worked out for me, right? Like I had a goal in mind. So now I get it. Some of you have families, you have children, you have life things going on. You can't do that. I didn't have that. I was single, able to live in my car and do what I had to do. So that's why. But lottery is definitely a tax on the poor. Why is real estate a smart investment? The return on monthly rent would take years to recoup, because I just told you about refinancing. It's not. I think you missed. You probably missed what I was talking earlier. You buy a property, you let the tenant pay the rent. Their rent pays your mortgage. They're building equity on the asset. You're cash flowing. You then go and refinance. You take out 75% of the value of the home when it's appraised. You then take that money that you sucked out, 75% of the value. So I used $50,000, right? If you get the property appraised and you refinance it and you take out the money off of a $50,000 property, that's $37,500. You take that same $37,500. That same $35,000. Well, my math is bad. That $35,000, that's 75% of $50,000. You take that $35,000 and you go buy another property, and then you take the same $35,000, buy another property, and you do what? You rinse and repeat. It's very simple. It's not complicated, right? And every 3 to 5 years, you buy another rental property. You just keep rinsing and repeating every 3 to 5 years. Refinance, take out 75%, take the money, and go buy a new property. And you allow the tenant to pay down the mortgage. Let me drink some water. My mouth is getting dry. Does that answer your question? It's a scrub, right? You don't have to. It won't take years. Some people refi within 6 months and they get their money right back out after they get it appraised. I just like to let some equity get built into the property because of your debt to income ratio. Because what happens with banks is after a certain amount of time, your debt to income ratio becomes too high that lenders don't want to lend to you. So I like to at least let the tenant build some equity in the property before I go to refi and take the money out the property. But again, once you refi and take the money out, you got your money back. So, but what he's missing is that, again, you can take your money out with the refi. Your initial down payment, that $35,000, that 75% from $50,000, you got that back in your pocket because you refied. And now that tenant is in the property, and that tenant is going to pay the mortgage every single month. that's not money coming out of your pocket. So you recouped your money on the refinance. And you need to go and, again, like I said, you're not going to get this stuff overnight. It takes time to educate yourself about these things. I didn't learn this stuff overnight. It took me years, trial and error, which is why I wanted to put this channel together, and I named my channel What Happened to Common Sense, because I want to just give you practical common sense ways of how you could go about building wealth. Again, not getting rich, not treating life like a lottery ticket, but just doing things over time. And there's 64 of you watching. Please hit that like button. So, and I think I made the mistake of, talking about people like Umar and them, because it attracts the wrong people to your channel. It attracts a lot of people who they're just really interested in beefing and going back and forth. They're not really focused on things that are going to actually improve their lives on a daily basis. A lot of people on YouTube, what I've noticed is that they really just like the mudslinging, the back and forth, talking about each other and their children and this and that. And I mean, I'm not knocking you if that's what you're into, but I just feel like there's better things that we could be doing with our time. So that's why, going forward, the direction of this channel is going to greatly change. So I'll run this stream for about another 5 minutes. So please like this video, share this video, subscribe and hit the notification bell. Wait for some more questions to come in. Let's see what else is here. I'm about to buy my first piece of land. Cleveland is cheap, cheap. Yeah. Just make sure that you're studying God-like, black and free. Make sure that you are taking the time to study and analyze the area and making sure that the area can sustain your prices of rent. In a downturn, if you had to cut your rental prices by 20%, would you be underwater as far as the mortgage is concerned? If property values decrease, just make sure that you're really taking these things into account. Rex Richardson said the 2 best books for building wealth to read is The Richest Man in Babylon and Think and Grow Rich. I would definitely say The Millionaire Next Door is a really good book for you to read as a beginner. The Millionaire Next Door it shows you a practical, slow way to building wealth. Again, guys, we're not talking about getting rich. We're not talking about being a millionaire in Miami, popping bottles and owning a jet. That's not what we're talking about here. I would be lying to you if I said that you're just going to, buy a gold coin or buy some Bitcoin and you're going to get rich. This is, again, I was talking about buying Bitcoin over a year ago almost, I've been talking about buying Bitcoin for a very, 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 very long time. And when I remember when I made this video, I had people coming on here and telling me that Bitcoin is a scam. I don't know what I'm talking about. I'm making a mistake. Well, I can't be wrong, because if I brought here at 5,000 and was sitting at 10,000, I more than doubled my money. Even though I've been buying Bitcoin back in the 700, 800 level. I'm just using that as an example. I have The Millionaire Next Door. Then good for you. Black YouTube has created a monster that it must feed, starve, or kill, build, not beef. Yeah, and as I said before, you won't see me make another Umar Johnson video until he is in prison. Then I'll make another video. One Up on Wall Street by Peter Lynch is one of the greatest trading books ever written. I don't believe that you can learn how to trade from reading a book. I honestly believe that trading is something that you have to do. And I would encourage a lot of you to first start on a simulator. If you can't make money on sim, you're not going to make money live. Trading is extremely hard. It is not easy. It took me about a good 5 years to really become a good trader. I blew a few accounts. I lost well over $16,000, $17,000 when I first started. It is extremely, extremely, extremely hard. Reading books is good, but trading is a contact sport. It's like playing basketball. You can't read a book on how to do a layup. You can't read a book on how to do a crossover. You have to get in the game and you have to cross someone over. You have to get in the game and actually feel that contact and lay the ball up in the sweat and, your breathing and all that. You have to do that. Trading is the same way. You have to do it. It's a contact sport. How do you get past the fear of taking a loss? Fear of making a mistake has really cost me. And night, start small. This is why I tell people, start really small. You don't have to go big. You don't have to go for that, $300,000 property. You can go for a $80,000 property or $100,000 property, in a neighborhood that may not get as much appreciation, but they have people who actually have jobs and work and pay. You just got to start small. Don't start big. And if you're afraid of getting started, find a couple investors to go in with you so you can spread the risk around. And also understand that, being an entrepreneur is not for everyone either. And there's nothing wrong with just working a job and allocating money to a 401k, to a pension plan, right? Or some type of Roth IRA or IRA account. There's nothing wrong with doing it that way. I tell people that all the time. Like, you don't, it's not either or, right? Sometimes you could do a little bit of both. Sometimes you can just sit on your hands and do nothing. It all depends on you. Take your time, though. Take your time with things. Mac Arden says, bro, I look at you as my mentor. No problem. And as I said before, I'm thinking about starting a Patreon where I can actually do more, or starting some type of a membership website. Investopedia has a good simulation programs. All exchanges have good simulations too. NYSE, CME. If you want to start going on a sim, Ninja Trader is a futures broker. Let me put that in here. I'll put it in. Let me put the link in here for you guys. I'll give you some good brokers where you could get live. Give me a second. Here's some brokers that actually they have demo accounts. So Control C, I'll put them in here, right here. Control V. So if you want to trade futures, they have for 2 weeks you can get live data, a live data feed. Again, you would have to go on YouTube and look at the tutorials, how to set everything up. You have to learn how to be self-reliant. Remember, my job is to teach you how to fish, not fish for you. If you want to trade stocks, this is a good broker, Lightspeed. This is what I use to trade stocks. This is one of the best brokers out here, Lightspeed Trading. Very, very, very professional. Good orders, good routing. So if you're into stocks, you have lightspeedtrading.com. If you're into futures, then you have Ninja Trader, and Ninja Trader also has Forex as well. No doubt, bro, you're 100% correct. Have to actually trade, but a question was asked about books. What does books give those with no concept of stocks, the markets, the basics? Yeah, of course. And I agree with you, Mark J, 100%. And there's also a lot of tutorials about stocks and stuff like that. Guys, I'm just gonna be honest with you. Trading is extremely hard. You have to understand, I worked in investment banking, so a lot of this stuff I know from working in investment banking. I've been a professional. I've done this for a while. Thank you for the donation, Mark Ardon. I'm starting with stock options. I think stock options is actually easier to start with. Stock options is easier as far as capital. You don't really need a lot of capital, but as far as learning curve, okay, so let me rephrase what I just said. As far as capital requirements are concerned, stock options don't require a lot of capital to get started. But the learning curve of understanding the delta, the gamma, the beta, the Greeks, it's an extremely steep learning curve for options. As far as stock trading is concerned, stocks really only can do two things. They go up or they go down. So, as far as trading is concerned, it's much easier to learn how to trade stocks and futures. But the flip side to stocks is that, to be a day trader, you have to get past the PDT rule, the pattern day trader rule, which you got to have $25,000 minimum in your account. So it's kind of like, the inverse of each other. It's easy to get into options, but it's hard to learn. It's easy to learn stocks, but it's hard to get in. I'm not a fan of Forex. I did Forex. It's just a lot. It's too many schemes and scams. But that's another good thing about Forex. That's a lot of CFD brokers, contracts for delivery, where you don't need a lot of money to get started. You could get started for like $500, $1,000. But now they have micro futures, right? They have the micro futures to trade. So you could trade with a regulated broker, CME broker, ICE, International Continental Exchange, and you can open up an account with $500, $1,000, a licensed, registered broker. What are your thoughts on Forex? The cost average concept you mentioned seems like an intelligent way to invest. Of course. It's great if you understand currency like George Soros. Yeah, currency markets it's a lot of manipulation in the currency markets. They're not properly regulated. I just, it's not something I like. Great info. Zenman BX, thank you for the donation. Yeah, the micro futures is the best way to go. And I'm gonna probably put together something for futures. I know a lot of you, because I haven't renewed my license and stuff, so I can talk more about individual investments and stuff now, because I don't have the same licenses that I have. I didn't renew them, so I can now actually give not advice, but I can actually speak to individual investments, which is why you see me now talking about real estate and talking about Bitcoin and talking about gold and silver, because I can legally do it now without being penalized. So, but again, thank you for the donation, Zenman BX. It definitely helps. Mark Adone, thank you for the donation. Alexander Wilson, thank you for the donation as well. And Godlike Black and Free, thank you for the donation as well. I appreciate it. So as you can see, guys, we're going to start doing this type of stuff more often, where we're really going to be building on, financial literacy, financial concepts, not talking about getting rich, not talking about becoming millionaires, but just talking about ways you can get started, little things you can do over time. Again, some people may not want to take big risks. Buy $100 worth of Bitcoin once a month. That's all. That could be something small. Right, you don't have to go crazy and put $20,000 into something. You could do something small. Lou said, I think XRP will take off soon. Yeah, I'm not a fan. Did you pass the Series 7 exam? No, I didn't do the Series 7. I went with different licenses, of which I'm not going to speak about right now, but it wasn't Series 7. I didn't do the Series 7 exam. Carrot bars. I haven't really looked into that yet, honestly. Pro woman J. I haven't looked into carrot bars, but Alexander Wilson, one day I'll speak about the actual licenses that I held. I'm iffy right now about things because you have a lot of trolls, and I don't want people trying to dig into certain stuff that I have going on right now. So that's another reason why I don't really want to disclose the exact licenses that I had, because if I tell the exact licenses I had, then people will try to go look them up and stuff like that. So you have to be careful with these crazy people on YouTube. You can't give out too much information, because these people will go out here and they'll try to, call your job, call your investors, or call your brokerages that you work with, your partners. So you got to be kind of hesitant about what you say and what you don't say, because, black YouTube is a crazy place. I mean, you got Umar Johnson threatening people to find their address and stuff like that. So I'm hesitant about putting out exactly what licenses I've held. But carrot bars, I don't know too much about it, but you have my word. I will go and do some research on it, and I'll put up a video in the coming weeks about what I found on carrot bars. I don't really know too much about it, to be honest with you. And that's the beautiful thing about investing, guys. You can't know everything. There's so many ways to make money. I know people who flip domain names. I did a little bit of drop shipping. I still do a little bit of it. There's people, they flip stuff that they get at auctions, at yard sales. There are people who they flip cars. Guys, there's just so many ways you can make money. There's people who buy broken or damaged Xboxes and PlayStations, and they fix them themselves and flip them and sell them. There's just so many ways you can make money. But back to XRP, I'm not a fan of the cryptocurrency XRP, but I believe it's going to make money. Like Tron. I think Tron is a garbage coin. But I think that Tron can make you a lot of money, because once Bitcoin really starts to take off, being that these altcoins, they have such small market caps. Like some of these altcoins, they have market caps of $500 million. So it doesn't take much to pump that cryptocurrency. And remember, let's go back to like these pension funds, for example. See, this goes back to what I was saying about Arthur Swanson. The top 300 pension funds, they have close to $19 trillion of assets. What if they take 5% of their assets under management? And obviously they would never invest in something like crypto because it's not regulated, right? But we're using a hypothetical, right? Where we're thinking what if scenarios, right? What if, all of these pension funds combined, they got 19 trillion under management. What if they put 5% into crypto in different crypto projects? What if they put 5% of their assets under management in gold, in silver? Like you start seeing the potential of where things can go. And that's why I laugh at people when they try to say crypto's a scam or, Bitcoin's some type of a Ponzi scheme when less than 1% of the world population owns crypto. You got to think about that. Less than 1% of the entire world population owns crypto. Most pension funds can't even legally touch it yet because it's not regulated. So you have an opportunity to be invested in things like Ripple and Tron and, EOS and just Ethereum, so many different crypto projects you can get involved in. And, that's $18 trillion sitting on the sideline. Eventually that money has to come into crypto once the infrastructure is built out, so you can begin to see the potential of where an XRP could go. What happens if XRP becomes a $100 billion coin? How much will it be worth if it becomes a $200 billion coin, right? Because if Bitcoin becomes a $1 trillion coin, which I expect it to become, we're looking at over $1 million Bitcoin. Right? Let's look at the cryptocurrencies right now, right? The market caps. You look at Ripple. Ripple right now is a $12 billion cryptocurrency. What if Ripple goes to $50 billion? $100 billion easily. When you got pension funds sitting on the sideline with $18 trillion, you could begin to start to see where these things can go and the potential of things. Well, of course, Warren, how could you call technology a scam? I mean, people thought the internet was a scam when it first came out. I'm about to do a video on Warren Buffett anyway. You know what? That's going to be my next live stream. Thank you for that, Lou H. I'm actually going to do a live stream on that. And this is going to be the last segment of this video. I want y'all to think about this, right? My mentor made his first $1 million during the dot-com bubble. Most of the stocks that launched during the dot-com bubble ended up being scams, ended up disappearing. But out of that dot-com bubble came IBM. Out of the dot-com bubble, you got Amazon. Out of the dot-com bubble, you got Google, Yahoo. Right? All of these big tech companies were able to, either they were birthed during the dot-com bubble or after the bubble popped, new technology was innovated and created. Most of them didn't make it. Like these cryptocurrencies, 90% of these crypto projects are not going to make it. It's probably only going to be 5 or 10 that actually make it. But Bitcoin's been around for 10 years. 10 years. Crypto, 11 years? Because it was 2009? Yeah, so we're going on 11 years now? Bitcoin, we have over 500 million transactions on chain. Can't be a scam if it's been going for over 11 years. Can't be a scam if we have over 500 million transactions. Warren Buffett doesn't get technology. He just doesn't. He said it out of his mouth. He's just not good when it comes to technology. That's just the reality. Doesn't mean he's a bad... You can't know everything, right, guys? You can't get everything. There's just certain investments I don't understand. It's just not my wheelhouse. Like real estate. I'm not good at flipping real estate. That's not what I know how to do. I'm not good at renovating real estate and rehabbing real estate. That's not my game, right? What I'm really good at is finding a good neighborhood that is going to appreciate over time, that has decent schools, that's close to transportation, mass transportation. And I'm good at, finding relative value below market and putting a good tenant in there. You know, that's what I'm good at doing. Now, every now and then you may get a bad tenant, but okay. But the U.S. dollar feeds the dark web too. How do you think most money laundering is not done with Bitcoin? Most money laundering is done with the U.S. dollar. And banks actually help facilitate it. UBS got caught laundering money for the drug cartels. Hundreds of millions of dollars. So, Tech, it's in his circle of knowledge. I think you meant to say isn't. Warren Buffett's not good at technology investing. He's not at all. He's been wrong about so many different forms of technology. It's just not his wheelhouse. So, but with that being said, guys, we've been going for a good hour and 40 minutes. I'm going to end the video here. Please like the video, share the video. If you subscribe to the channel, please hit the notification bell so that you can get my notifications when I go live. Also, my other social media platforms are in the description below. Thank you to everyone who donated today. ZenMaxBX, Alexander Wilson, Mac Ardoin. Who else donated? Alexander Wilson, and it was God. It was God Like Black and Free. So thank you to everyone who donated. If you want to support through the PayPal later on when watching the stream, the PayPal's in the description below. So have a great night, guys, and we'll be building more in the future.